Welcome back, guys. This is also another review. Just also let you see a video I posted previously on a long-term trade setup for volatility 75 synthetic index. I told you I was going to also do same for the other synthetic pairs, and this is actually the step index, and we are on a weekly time frame. So I'm going to show you what has transpired if you are just going to follow this simple step. Okay, if you're just going to follow this simple trading style, okay, and believe me, you are really going to do well just following this simple trading strategy, and you are going to be profiting more on the market. All right. Okay, so guys, so this is step index. Okay. All right. So now let's see. I want to begin my analysis from this period. Yeah, from this period, which is 2020 August 21st. Okay. All right, where we had a market shift from a downside to an upward movement. We had a swing from this point to this point. All right. So when the market swung from this point to this point, what was happening? Actually, we noticed that price was trading from a lower point, and then it was trading and it was swinging higher. Okay, so we actually had the fair notion that, so let me, this is on a weekly time frame. All right, so let me quickly put my drawings so that you can see exactly what I'm trying to depict here. All right, so price began from this point, and then it began moving higher. It came to this point, and then came down, and then it swung up higher to this point. Okay, and then it traded down to this point, and then price moved up towards this direction. I just try to put this line so that you see that we were actually trending higher. Okay, we were in a bullish market where we have the high, we are always having higher highs. Okay, and then we're having higher lows. Okay, all right, so this was actually a small bearish, a bullish movement here, and as we got here, what happened? There was a break in the structure, so price traded below. Instead of us having a higher lows, now we had a lower low. Okay, so this low broke this previous low lower. Okay, this means that there has been a shift in the structure. All right, so quickly, if there is a shift in the structure, where did the shift in the structure happen? Okay, so this was, so let me delineate the lows that we had. Okay, this is one of the lows, this is one of the lows, this is another low we had in here. Okay, so you could see that this low didn't break this low. It traded up higher and it came down this way. It didn't break this low, and then when it traded up, now we had the low violated. So when we have the low violated, what do I say? We have to look for a retracement into the upside. Okay, now we're trending upwards, the market was bullish, so when we have a low violated, there's been a shift in structure. So now we look for the sellers to go and pick their trades on the top. Okay, so now where do we expect price to naturally trade into to take down to take price, or to run with price? Okay, so now here we see that price has traded into a certain high here. Let me quickly, price had traded into a certain high here, and then it got bounced off and it came back here. Now let me draw this line here. So going back into time, you will notice that price actually was bounced off after it took down a certain high at this point, and then it couldn't go further, and then it was reversed by this particular block we have here. This is another block. You know, if you notice carefully, the body of the candle was where it was reversed. So let's say this particular um so it's even more of this particular candle that actually, so it's even more of this particular sorry, it's even more of this particular other block that actually traded, or let me put into the mean of it. Okay, so price actually, the body of the candle actually reversed, let's say somewhere into the mean of the candle, and then but this is not where we are looking at. All right, now you could see that on this high, on the candle, on the high of this particular candle, the price was not violated. So price traded into this point. So which level is this, and why did price trade to this point before it got bounced or before it reversed? So now let's go down to a smaller time frame. So if we've seen this on a bigger time frame, let's go down to a smaller time frame to see how we could have easily set a trade. Okay, so let's go to daily time frame. Okay, so we have this level, here. So which area within this level the price got bounced off? Okay, so let's put a line here. So we notice that price actually goes bounce on this particular area. Now, so assuming we have price trading down this way on the daily time frame, on which premise do you think that price, or on which area do you think that price would necessarily go up to take down either the highs and the lows and all? You know, first and foremost, I would have thought, oh, price should necessarily reversed, should have been reversed by this particular orders that you was used to break the structure. So I would have easily thought of this area first as an entry. Okay, I'd have easily thought of this area first as an entry. Probably price even trading should trade and come all the way into this area. Okay, so anywhere inside this area would have been, but watch here, you'll notice that price traded, got to this area, it reversed, you could have taken some profit here, yet still your premise would have still not held, because the idea is that you would wait to maybe take profit on the bodies of this candle. The next day price pushed up and traded above it. Here our stop loss will be hit. Okay, so now we look at our next area that we could necessarily take. So we'll consider this area too. Now price came in here to this area, and then what happened? It got bounced off. But when it got here, it got bounced off this particular candle here too. So price couldn't continue, and then still, if you had entered, you could have still taken some profit, scale off something, but yet, I mean, it wouldn't be convenient. Price actually traded and surged forward into all these areas, took down this high here. There was a high here, it took it down, it continued trading, and then it came down. So now, normally, I believe that most of us would have thought that, okay, so this particular bullish candle here would have been our bearish order block. So either we are taking the mean threshold of the candle to see that, okay, price should trade into the mean, and actually price actually traded into the mean threshold, where this particular high here got bounced off, and then so I'm in trade, and it goes and it comes back, touches it again, and as though, and then it breaks into, and now we are not certain as to whether we should hold on to this trade or cancel the trade, because price has even traded above this, which we considered as an order block. Okay, now if you are not more certain, okay, this is what you have to do. Go down to the smaller time frame. Now let's go to our H4. Why should we go down to smaller time frame? Smaller time frame is able to give you a more clearer picture of possibly where price can or may go. Okay, so look at the down push. This is where it broke the structure. Now when you look at all these areas were fully traded, but then you could notice that there was some area up here which price had some sort of imbalance. Okay, look at this area from the bottom of this candle stemming down to this area. Price traded here once. Okay, you can even say, okay, so you can ignore this, the wick of this, and then say that, okay, so you can see that there's some tiny imbalance within this area. If you even consider this as your point of entry, price doesn't go too much further from this point. Okay, but if you consider this as your point of entry, now you should take note that this particular area up here also has some small imbalance between it and then the previous candle. Okay, it also has some small imbalance, so necessarily you should expect price to also go and close in on the small imbalance in that candle. Okay, so that you can also, this small imbalance here. Okay, now let me go down to the 1 hour time frame, so now we are more certain. You can see it clearly here that there was this imbalance in this area. Let me refine it more further. You can see this imbalance, that there was some sort of imbalance in this area that price needed to take down before. You see, let me give you a clue of what sometimes some of the other blocks really, how some of the other blocks you should refine them and make them more certain that these are other blocks. Usually we have candles which are considered as, like these two bearish candle, continuous bearish candle we see here, are considered as other block, especially when after they form we see a quick rally and a run away from that bearish other block that has been formed here. These are institutional sellers, but they sold inside these bearish candles. Okay, now let me give you a clue of what even will give you even more more surety of institutional sellers coming in strong into the market. Look at this. Look at this bearish candle here. Look at this bearish candle. Okay, now inside this bearish candle is where we have where institutions actually began to place their sell orders. This bearish candle, the last bearish candle before this manipulation came in, and then the market sold off. So you will notice that when price traded and came to take orders, when it was at this point that price actually got reversed. So this is where the smart money came in. This particular bearish candle here, this is where smart money came in. They manipulated the market and then they began to sell off. So anytime you see that there's a quick rally away from where the order block is, any push up where you feel that this is a push up and you feel it's an order block straight into a previous order block, any quick rally away and leaves, especially when it leaves liquidity void, and then it goes down to break a structure. For instance, here we had the market structure on the 1 hour time frame. We had a structure here, and what happened? It breaks it. This particular area is considered a very strong order block. Okay, these are things that you may not find people telling you, but this is it. I learned it from my mentor. Okay, so this is a strong order block which would propel price to really rally away. So now you are more certain of price coming all the way to this area to close in on this fair value gap we have here, and then to shoot at the other block, and then it goes down. Okay, so this is actually to find and make you have more concise entry point. So you realize that here price touches this point and then boom. On the 4 hour time frame too, you could see that this is a continuous bearish order block. All the three continuous candles here, the bullish candles here, the bearish order block that should propel price to go down. But because of the gap we have in here, we normally should expect that, okay, price should actually close in on these gaps, on these gaps. So you could notice price actually traded but couldn't close in fully on the gap, plus the small void that we have at the very top here, the small area that has not been traded. You know, when price is trading, price must trade to a certain point once. A price must trade, there must be a buying and there must be a selling. So if there's only selling, so who is buying then? All right, so this place must be traded again into. All right, good. So basically this is why price had to trade and come all the way up to this point and take down the liquidity here. And let's go down to our daily time frame, and let me pull the fib so that you see that, okay, as price came here. Now, one of the guides that can also help you is using the fib levels. Okay, now let's see when price traded, which level on the fib did price actually reverse? Which level on the fib did price actually reverse? So this is the level that broke the structure. Sorry, this is the level that broke. This is the from the high to the low that broke the structure. So we expected a retracement into traded and even traded above. Even if you have a trade 23 level, you wouldn't be wrong. And where would you normally place your stop loss? Above this high. Price didn't actually go and take down the highs. Okay, even if you had your premise not set right and your stop loss was above this level, I think my next video I'll have to talk about money management and considering how you should which lot size you should be using and all, so that you know your account size and know how to go about your entries. All right, and then let's look at what happened. So price traded to this level. We have refined why price traded to that level, and then price began to break down. It broke down, and then it broke below the 100 level. Let me zoom out, and then price traded and broke down till this is where you begin to scale off. At this first level, you scale off here. At this point, you can scale off on the 100, you can scale off on the 161, you can scale off here too. I mean, this is where you have these big time traders stop loss, take profit one, take profit two. These are wild. Can you hold on trades from this day? Let me show you how long it took. So for instance, it was on this was on the November 11th. Okay, November 4th, 2020, all the way. So if you're going to wait till price had gotten here, this is somewhere 2021 March. Were you going to be able to hold your trade all the way to from November, December, January, February, March? We're going to do that. You were just in hurry to take some profit and just run away from the market and just go and spend the money, But you should know that the market is no get rich quick. Okay, if you could even held on to the trade, look at where it came finally to this level, and where did that level hit? It was somewhere December. Come on, more than a year. Would you be able to hold on to this trade? All right, so this is it. Price scale. There was a break in structure. Price actually traded down and then came down all the way to this level. Now down, go down to again down to and what streets to this level. It creates sorry, it creates a long-term high here. Sorry, it's not a long-term high. We expected it to come and create another a long-term low beneath this level, beneath this price level. Okay, look at it. order block and got bounced off, and then it traded up, took down this long-term high. It's taking down another high here, guys. What do you see? So tell me, what do you see? It's the break structure, market structure here. So push it back where we can take trades. Retreat down here. Price can necessarily come into a good, and you think price has traded another area, price imbalance. The other, consider the particular on this particular bounce off. So trading directly candle becomes this, get back up. It's so simple. Good. FVG. All right. Clearly, must closed in. FV takes Yeah, let me show you. So, or we have some I'm okay, good to go. Data every